how the charts or the stock market works, in this video I'm gonna teach you how to start trading Forex step by step. If you want to start day trading, this is gonna be the complete guide that you are going to need in 2026. If you ever wonder how the charts or the stock market works, in this video I'm gonna teach you how to start trading Forex step by step. So please make sure that you pay close attention to this video and write down everything that's important, because after this video you are going to be ready to start trading in the stock market, especially the Forex market. All right, first things, what is trading? Trading, you're basically trading instruments. If your prediction is correct, you profit from it, and if your prediction is wrong, you lose money from it. All right, it makes sense. You are basically betting if the market is going to go up. If your prediction is correct, you make money, and if the market comes down, you lose money. All right, now what are the things that you need to start trading? You need these simple things. You need a broker and you need a website to analyze the market. In this case, we're gonna be using TradingView. All right, remember, TradingView is literally to analyze the market, and you're gonna be using your broker to deposit your funds so then you can start trading with. And your broker is going to assign you a trading platform in which you are going to be actually positioning your trades. So you basically need three simple things. TradingView just to analyze the market, you need the broker to deposit your funds. Basically it's going to be like a bank. I want you to think about it as a bank, and the broker is going to assign you a trading platform in which you are actually executing the trades. All right, simple. Now, what is TradingView? TradingView is the most important thing that you need about trading. In another video, in the second part of this video, we're gonna go over how to open up your broker and how to trade using the trading platform. But the main bread and butter of trading is understanding the market, which is what we're gonna do in this video. We're gonna go to TradingView, and then I'm gonna show you guys exactly how everything works and how these patterns are actually easy to understand. All right, first things first, what are all of these candles that you guys are looking at in the market? I want you guys to think these candles are buyers or sellers. In this case, we have the blue candles, means the people that are buying this instrument, which is Dow Jones Industrial Average, which is an index fund of the United States of America, okay, for anybody that is out of the country. And the black candles actually means the power of the people selling. So in simple terms, we have the blue candles are people buying the stock, and the black candles means people are shorting the stock, which means they're selling the stock. Okay, simple. All right, so how can we identify if the market is going to go up or if it's going to go down? What are all of these indicators, all of these lines that you guys see? I'm gonna break it down, guys. Stay with me. All right, so I'm gonna grab a whole different pair just to explain you guys. In this case, I'm gonna use the more simple pair that everybody starts with, which is the Euro USD. All right, I'm gonna grab another one which doesn't has a lot of lines. Okay, perfect. This one, we're gonna be using this one just as reference for this video. All right, so first things first, we know that these candles are actually the buying and the selling power of another traders around the world. When you see a candle that is blue, it's obviously going up. When you see candles that are going down, they're most likely pushed by black candles, which are sellers pushing the market down. So let's say that you buy a position right here, and your prediction is that the market is going to go up, and then you buy it at, I don't know, you buy it at $5, and the stock market goes up, and now the stock is worth $6. You now made $1 off of this single trade. All right, now imagine if you are playing with bigger numbers. Let's say that you are playing with $500. You are betting that the market is going to go up, and then now here at this point you're gonna sell at $700. Now you make $200, and everything is by percentage. So now let's just say money doesn't matter in the stock market, because now everything is a matter of percentages. All right, a matter of percentages means that you are gonna be making either 10%, 20%, or 50% of your account. All right, the double of $1,000, the 100% of those $1,000 would be $2,000. All right, so if you make 100% of an account of $1,000, you basically double your money. All right, those are two simple ways of looking at it. All right, so how can we actually see if the market is going to go up or if it's going to go down? All right, there are simple things that I'm going to explain you guys, and that's why I have this PDF that I did today. So I'm not gonna go over prop firms, brokers. I'm gonna make a whole nother video just for that, but in this video I want you guys to understand TradingView, because TradingView is the bread and butter of trading. All right, so the first thing that we need to know about technical analysis is support and resistance. You cannot trade if you don't understand the fundamentals, say base and basics. So these are literally the basics of trading: support and resistance. All right, support and resistance is very simple. First things first, support is literally, I want you to think about it as the bottom of a house, like the floor of a house, and resistance is the roof of a house. So let's say that this is a house, so we have the floor and then we have the ceiling. All right, this is support and this is resistance. Okay, why is that important to us? Because the market actually respects these patterns. All right, we're gonna go into TradingView right now and we're gonna analyze our support and resistance and why they are important to us. All right, first things first, we have the bottom of the house here, which is support. All right, and then we also see that we have the ceiling of a house right here, and which is resistance. So what happens when you have a ball and you actually throw it down to the floor of the house and then it bounces back up to the resistance of the house? The ball is actually moving, and the price action of the stock market is like the ball. Okay, whenever you throw so high up a ball that actually goes above the ceiling of the house, it actually goes to the second floor. I want you to think about it as the second floor. That's the second level of resistance. So now it's utilizing the first floor as a ground area to go up to the second floor. This is the same thing with trading. Let's say that this is a ball and the market is coming back down, bounce back up, and after you throw so high up, now it's using this ceiling as a level to the second floor of the house. That is trading. That is actually price act. I want you to think about it. The price action of the market is actually just doing that. Okay, this is support because now price is actually respecting this area. This is resistance because price is actually respecting this area, because every time it touches resistance, price comes back down, and every time support, it comes back up. All right, but what happens when we break above or support resistance? Okay, those are the indications that we need in order to make our positions. Let's say that you see the price is breaking above this ceiling. Now you think to yourself, price might actually want to go up now. Okay, so that might be the right indicator for you to start taking buys to the upside, because now you're looking at the market. Then you realize that the market is actually not coming back down like it's supposed to. Now it's actually going up. So that would be the perfect scenario for you to take buys in this case. All right, so in this case you would grab your long in position and then you would target the second floor, which is this floor, and absolutely if you were to take that trade, you would be correct and you would make money. All right, but let's just say that in this case price actually when it comes back down, let's say that you are right here and the price actually wants to come back, it's respecting resistance, then you might think to yourself, okay, now price is actually respecting the ceiling of the house. Now it seems like it wants to come back down. So what would I do? You would sell, because now that's an indication that the market might want to come back down. Okay, so that's the best thing about trading. All of the patterns repeat themselves, so you can actually identify them right before they happen. And if you are good at identifying the market before they actually happens, that's how you can become a profitable day trader. All right, so simple as that. If you were to see the price right around here and you think to yourself, okay, now I see the price is actually respecting resistance and I think the price is actually going to come back down, you position right around here and then you will target the support, the roof of the house. Okay, so now if your prediction is correct, that's where you make your money trading. It's very simple, guys. Okay, but I'm gonna go all of the terms that you guys need in order to understand this more clearly. Hopefully by this clear and simple explanation you guys understand a little bit more about trading. This is literally the fundamentals, okay? Support and resistance, the most basic things. But what are the other terms, such as market structure, price action, trend lines, channels, shorting positions, long positions. Okay, so let's go over the actual trades. How do you position yourself the first trade after you watch this video? Because my whole point of this video is for you to take your first trade today. After you go and register to your own broker, I recommend Liquid Brokers. I'm not getting affiliated by them. They're a whole different company, but I trust. That's what I use. You guys can see I have around $56,000 in this account, so I trust them. Secondly, once you have deposited the money into this broker, now you can trade within their trading platform. All right, so what would you do? Let's say the price is actually right here and you are about to take a buy in the markets. All right, so you would go to trading view, to your trading platform, and then you would click buys or sales. Simple. And that's where the actual market get executed, the position get executed, and that's where the real money comes in. All right, let's say that I will take a buy. Boom, I have it right here. I have a buy on Euro USD, and it's actually negative $5 right now because the broker obviously has to make their fee. And now, as you guys can see, now I made 15 bucks off of this trade. I'm gonna close it. As you guys can see, I have around 56,361. I'm gonna close it. Now I should have $56,371. Simple. Now I made $10 within the stock market off of predicting the market was going to go up. It did go up, and I profited $10. Obviously, $10 for an account that is worth $56,000, it's so little, it doesn't make sense. But at least you guys got the point of how the market works. All right, hopefully by this video you guys understand. And if you guys don't, if you guys want me to make another video, I'll do it and I'll explain it better. Just stay in with me, guys. I promise you guys are gonna understand how to start day trading. All right, let's go over another simple term of day trading. All right, we have trend. What is the trend? Trend is basically if the market is bullish or bearish. I want you to think as the market being bullish, market going up, and if the market is bearish, market going down. Simple. All right, I'm gonna show you guys in better terms what those terms means. If you guys see that the market is actually going up, that means that we have a bullish market, and bullish means that we are going up, we are going to the upside. All right, and where would you identify a bearish market? Would be, for example, this one, because it's coming to the downside. Okay, there are more terms such as lower lows, lower highs, higher lows, and then I'm gonna break it down in a whole different video. But in this video, I don't want to overwhelm you guys with so much information right now, but I'll do that in another separate video, how to identify your higher highs and your higher lows, stuff like that. All right, so I'm gonna go over just the simplest thing that I could show you guys, so you guys actually understand how the trend lines and the market structure work. All right, I'm gonna go grab this and then I'm gonna show you guys. Okay, so now in this case, the market is going to the downside. That is categorized as a bearish market structure, and this one, which is going to the upside, is categorized as a bullish market structure. Why is it a bearish market structure? Why is this one? Why is it a bearish market structure? Simple, guys. We have a high, and then price is actually coming back down, and it's creating a lower low, and now it's coming back up, but it's not reaching higher than the previous low, which makes it a lower high, and then it's coming back down to create a new lower low. So that is when you have lower lows and lower highs, that's when you categorize a market structure as bearish, because it's coming to the downside. Why is it coming to the downside? Because you have a high and then you have a low, and then the low is not higher than the previous one, so that makes it a lower high. The next low is actually lower than the previous low, so that makes it a lower low. That's how you know that the market is actually doing this to the downside. And how do you identify a bullish market structure? You will identify a bullish market structure when you have higher highs and higher lows. And how can you identify the higher highs and the higher lows? Simple. You have a low, and then you have a push to the upside, which makes it a high, and then a retracement is not actually coming further down than the previous low. It makes it a higher low, because now we have a high and then we have a higher low, and then the next one is obviously a higher high because it's actually higher than the previous one, and then the continuation is a higher low because it's higher than this previous low, which makes it a low, higher high, higher low, higher high, and it goes by that. Okay, hopefully it makes sense, guys. That's why I have this picture. I'm gonna show you guys that picture. As you guys can see, these are the higher highs and the higher lows. In better terms, we have a low, we have a higher high, we have a higher low, we have a higher high, higher low, higher high. Okay, so that's how you know that the market is going up. But when you have a high and then it comes back down, boom, and then we have a lower high and then a lower low, then a lower high, then a lower low, and then a lower high, and then a lower low, that's how you know that the market is actually bearish. Simple. And why do you need to know these simple this trend line things? Because those are basically confirmations that you can use to position your trades. If you see that the market is actually going up and then you see a retracement, but then you see that the market is not actually coming back down, it's making a confluence right here, and you see that the market could potentially create a new higher high, you could place a position right here, and that would be your trade, and that would be another sign or prediction or way to predict the market. So how would you do that in TradingView? All right, simple. Let's go over to TradingView one more time, and then you see here, all right, you see that the market is actually, it goes from here, all right, it goes from here. You see the market actually coming back down, all right, it's actually going up, and then you see that the market is not actually reaching or overpassing this previous high. So that would be considered a low, this would a high, that this would be a low, this would be a lower high, and then you see that the market is not actually going up further. So that would be a confirmation for you to actually place your sales, because you see that the market is actually consolidating right here. So you would take your sales right above here, and then you would point to the next lower low which will be created, which would be, in this scenario, this would the sale. And if you are predicting the market coming back down from this point to this point, you will be correct, and that's where you would profit. All right, I hope that kind of makes sense for you guys. I hope this way of trading, I show you guys trend lines, and then I show you market structure, and then I also show you support and resistance. There are a lot of more things, but this video would be literally hours. Okay, but this is the most simple way to start trading and to actually analyze the market. I hope that by the end of this video you kind of understand a little bit trading, and you understand this market structure, trend line, support and resistance stuff. It's actually pretty simple. So now after this video, I want you to actually go to TradingView and start analyzing the market by yourself, and I want you to start taking your first position. In the next video, I'm gonna show you how to literally open up the broker, how to start trading in the platform and stuff like that. This is gonna be a whole course on trading. So I hope that you guys like this video. If you guys do, please give it a thumbs up, and I'll see you guys in the next one. Don't forget to subscribe for more videos like this. I hope that I helped you understand Forex trading for beginners. My name is Isaac Vera. I'll see you guys in the next one. Take care.